Bitcoin hitting a record high, rocketing over $111,000 per coin on Thursday. The cryptocurrency is soaring on growing optimism around U.S. regulations, and we want to talk about how crypto might fit into your portfolio and lessons that everyday investors might learn from the ultra wealthy. Here with more, we've got Michael Sonnenfeldt, who is the founder and chairman of Tiger 21, an exclusive peer network of wealth creators who are navigating, managing, growing their money. Michael, great to speak with you once again. Thanks for taking some time here with us on Wealth. Just talk to us about what you're seeing in some of the thought process among the ultra wealthy thinking about adding and maintaining crypto in their portfolio right now.
So, our members are wealth creators who are now trying to preserve capital. They've had a liquidity event, they've sold their business, and they want to hold on to what they have. And across the board, it's about 28% private equity and about 28% real estate and then 24% public equity. But the cryptocurrency is a lot of excitement in the aggregate because our members manage about $200 billion of their own wealth across our 1,600 members. The cryptocurrency might only be in the 1 to 3% range. So across our group, 5-6 billion in crypto assets. But we have some diehards who have huge allocations within their own portfolios. And just look at Bitcoin. Bitcoin not only is doing something amazing now with an all-time high, it's been the top performing asset across the board for, I think, the last decade. And so you have believers who are being validated not only by crypto's extraordinary performance in Bitcoin, but now Coinbase being added to the index. And that's really going to propel some more conservative institutions to give it a better look.
Certainly. And I just want to come back to the numbers that you just mentioned a moment ago. You said about 28% private equity, 28% real estate, 24% public equity, which gets us to 80% of their portfolio. So is that last 20% just holding cash plus crypto?
Last 20 is half in cash, 10%. That's pretty typical over the last decade. Hedge funds have been decimated over the last decade, down to 1%. It's unbelievable. And then there's commodities like currencies and gold. Bitcoin right now is sort of neck and neck with gold within our members. It's a storehouse of value of all the cryptocurrencies. Some of the cryptocurrencies are focused on transactions, other on storehouses of value. And the general consensus is that Bitcoin, while not as flexible in transactions, is a better storehouse of value. And they're looking at it as a superior gold substitute. Some people like gold. Some people like all of the digital aspects of blockchain and so forth in Bitcoin.
What were some of the propensities to still be risk on that you saw from the ultra wealthy who you engaged with, even when we saw massive pullbacks during the month of April? As we were looking across some of the most risky parts of the investment thesis, Bitcoin continues to be one of those. How are they picking and choosing what those entry points look like within Bitcoin?
Yeah. So if you're a Bitcoin fan, every time it's a dip, you think it's a buying opportunity if you have a long-term thesis. If you're sort of a day trader, which very few of our members are, you might be nervous when the price falls, and that's what makes a market. The people who have a fundamental view might see a dip as an opportunity, and the people who are more reacting to momentum or the curves that are going on, the ups and downs, they might get a little more nervous. But we have within our 1,600 members a very small minority, but growing and more vocal, feeling like the thesis they've been talking about in our groups with our members. Our members get together every month for a full day, 12 to 15 people, and learn from some of the top experts in the world what they're thinking and how they're processing it. And we have some pockets of Bitcoin expertise that are at the top of the world, and they've just been singing the praises for a decade now.
And so how can everyday investors who might not be ultra wealthy in bank account, but ultra wealthy in spirit, perhaps, and trying to get to some of those aspirational goals, Where are you seeing them kind of average into and make sure that they are getting into better positions for their portfolio, looking at what the ultra wealthy are doing?
Sure. All of economic analysis says that market timing generally does not work. If you're a believer in Bitcoin, you could either make a one-time allocation that brings it right up. If you say, I want 3% of my assets, whatever your asset base is, or 5%, you can do that. Some people like averaging in, so they say, I'm going to average in over a year with 1/12 of my allocation every month. But reacting to intraday trades has very little effect on the long-term return. If you're right, wherever you're getting in now, doesn't matter whether it's at a high or a low for the week or the day. If you're wrong, it won't matter either. But the history shows that trying to time the market is much less effective than setting a long-term allocation and legging into it.
Great to see you, Michael. Thanks so much for taking the time, as always.